One day ago, the market priced the war as the regime's master variable. This morning, it inverted. The president says he cancelled the scheduled strikes, declared the war effectively over, and that a 60-day ceasefire with a reopened Strait of Hormuz is, in his words, in pretty final shape. Stocks ripped, the fear gauge collapsed, and oil fell to its lowest since March. The whole tape exhaled. But here's what the rally is built on: a deal that no one has actually signed. Iran's foreign ministry says no nuclear agreement is final, and the president himself called the leaked terms fake news. The market is pricing a handshake, not a signature, and the real risk has quietly moved 6,000 miles east to a central bank meeting in Tokyo next week. So where's the edge? Not in the relief rally on an unsigned deal, not in the record public offering already up 19%. It's in the power the artificial intelligence build has to buy, whether the war ends Friday or not. The buyer, not the bounce. This is the asymmetric. Issue 14, the reopening, tech and crypto investing for thoughtful retail from an operator's lens. In 24 hours, the master variable inverted from war to relief, and the edge moved from the asset the shock paid to the asset the artificial intelligence build must buy. Here's the one-line read. The president cancelled the scheduled strikes, declared the war effectively over, and says a 60-day ceasefire with a reopened Strait of Hormuz is in pretty final shape. The tape ripped, the S&P 500 up 1.75% to 73.94, the Nasdaq up 2.5%, the Dow up more than 900 points, the fear gauge collapsed, and oil fell to $87 as the war premium bled out. But the deal is not signed. Iran's foreign ministry says no nuclear agreement is final, and the president called the leaked terms fake news. Meanwhile, the largest public offering in history did not drain the tape, it confirmed it. SpaceX priced at $135 and closed its first day at $161, up 19%. The underpriced risk moved east to the Bank of Japan. And underneath the relief, the durable edge is the power the artificial intelligence build must buy regardless of who signs what. The same discipline labels run throughout: confidence, high, medium, or low, consensus versus variant, what the market believes and where we may differ, and on every call, what would change our mind. This is research, not advice. Part 1, the reopening, the relief, the unsigned deal, and the risk that moved east. The regime at a glance. The S&P 500 up 1.75% to 73.94 on the de-escalation rip. Oil down 2.5% to $87, the lowest since March. SpaceX closing its first day at $161, up 19% off the offering price. The Bank of Japan set to hike to 1% next week, its highest rate since 1995. Gold easing near 4,080 as the war bid deflates, and Bitcoin rebounding near 63,000, though the bottom is not yet confirmed. The relief is priced on an unsigned deal, and the real risk moved to Tokyo. Start with geopolitics and oil. The choke point reopens, claimed, and the premium bleeds out. Crude fell to $87, with Brent sliding toward $89, the lowest since March, after trading above 93 just one issue ago. The president cancelled the scheduled strikes and says a 60-day ceasefire reopening the strait is in pretty final shape. The energy line that drove 4.2% inflation is, for now, deflating. But the deal is not signed. Iran's foreign ministry says no nuclear agreement is final, and the president himself called the leaked terms fake news. The market is pricing a signature it does not have, and a collapse of talks this weekend reprices oil and volatility violently in the other direction. The cleanest hedge is exposure that does not depend on the signature. Then rates and the Federal Reserve. A hot print, a fresh oil tailwind, and a hawkish new chair. May headline inflation ran 4.2%, the hottest since 2023, energy the dominant driver, and that print still boxes the Fed in the near term. But the oil reversal is the first disinflationary tailwind in months. If it sticks, it pulls the single hottest line in inflation lower into the summer. The new chair's first meeting is June 16th and 17th, with the funds rate held near 3.5%. No cut is expected, but the calculus is two-sided now in a way it was not on Wednesday. Watch one thing: whether the new chair acknowledges the oil decline a dovish tell or anchors to the 4.2% print and keeps the box shut. And here is the risk that moved east. Tokyo, not Tehran, is next week's real variable. The Bank of Japan is set to raise its policy rate to 1% from 0.75% on June 15th and 16th, the highest level since 1995, with the move heavily priced. A higher Japanese policy rate compresses the carry trade, the cheap funding leg under a large share of global risk positioning. The unwind of August 2024 is the cautionary template. It lands the same week as the Federal Reserve into a tape that just melted up on relief and a record public offering. And carry unwinds have repeatedly hit Bitcoin and global risk first. This is the week's most under-discussed risk. Now the issuance vacuum and its largest ever test passed. 1 issue ago we asked whether the offering vacuum had a demand limit. Friday answered. SpaceX priced at a fixed $135, opened at $150, traded as high as $176, and closed its first day at $161, up 19%, for a valuation near $1.9 trillion. About $75 billion raised, the largest public offering in history, more than triple the previous American record. And crucially, the record supply did not drain the secondary market, it lifted it, debuting into the relief rally. The window is open. But a 19% pop on a company still losing roughly $4 billion a quarter is a momentum asset, not a value one. The window being open does not make this name cheap. Then the havens, and the war bid deflates. Gold eased near $4,080 as the safe haven premium bled out with the oil decline, the mirror image of last issue's war bid. The structural reserve case is the durable floor. The tactical war premium is what just gave back. Bitcoin rebounded about 3.5% to near 63,000, bouncing off sub-60,000 lows on the war over claim, trading as before. As a high beta liquidity proxy, not a haven, but independent desks note the weekly momentum has not yet confirmed a bottom, and the Bank of Japan hike is the specific near-term headwind. A relief rally is exactly when the geopolitical bid gives back. Put it together, the regime swapped its master variable from a straight to a signature and from a war premium to a relief rally. The tape exhaled, the record offering confirmed the window is open, and the havens gave back their war bid. But the relief is priced on an unsigned deal, and the real risk quietly moved to Tokyo's decision next week. The relief needs a signature and a soft Federal Reserve. So what bid needs neither? Optionality, less duration. Less leverage, plus the power infrastructure, the artificial intelligence build, has to buy whether the war ends Friday or not. Part 2, in focus, the power the artificial intelligence build must buy, the data, then the debate. The lead is Talen Energy, the artificial intelligence trades power bill, already contracted. Our workup pulled its numbers live from its regulatory filings. In the first quarter, Talen generated $461 million of operating cash flow, up from $119 million a year earlier, a near fourfold swing on $1.1 billion of revenue. Cash rose to over $1 billion. Talen owns the 2.2 gigawatt Susquehanna nuclear plant, and it has signed a roughly $18 billion power purchase agreement with Amazon, running through 2042, selling carbon-free electrons straight into the data center build. The bull case, a contracted, scarce, carbon-free power asset, levered to the most durable demand bid in the market, with a second contracted revenue stream from the grid that rises as it tightens. The bear case, this is a levered independent power producer, long-term debt near $7 billion, and its reported earnings are noisy, swinging on hedge marks. Last year it posted a net loss despite $700 million of operating cash flow. You cannot value it on reported net income, and it has already re-rated hard on this story, crowded, not contrarian. The structural case is high confidence. The entry is the hard part. Own the thesis. Respect the balance sheet. In crypto, the read is a relief bounce into a central bank week. Bitcoin rebounded about 3.5% to near 63,000, bouncing off sub-60,000 lows, but the weekly momentum has not confirmed a bottom, and the Bank of Japan hike is the specific near-term headwind, since carry unwinds have repeatedly hit Bitcoin first. This is a relief bounce in a macro liquidity asset, not a confirmed trend change. The durable signal is not the price, It is the regime shift in how the asset class is analyzed. 2026 is a real revenue market, not a narrative market, screening tokens and protocols by actual fees and earnings. And the plumbing keeps getting built, tokenized stocks, crypto rails moving into brokerage, even as the price chops. And the thematic read, the artificial intelligence trade is rotating from the chip to the physical layer. The bottleneck is no longer graphics chips. It is power, grid, copper, and cooling. Buy what the build must buy, contracted nuclear and independent power producers like Talen, electrical equipment on weakness, copper and critical minerals into the month-end trade review, and the low-cost gas that bridges the gap. Be wary of the crowded chip beater, whose growth is increasingly priced and whose capital spending is a liquidity drain on its own shares. Oracle's $40 billion raise into a 10% drop was the cautionary tale. The cleanest durable asymmetry is the layer the build must purchase, regardless of the Iran signature or the next inflation print. Part 3, the reopening signal. The relief is real, but the deal is not signed. Trade the regime, hedge the gap. The issuance window is open, and the risk moved east to the Bank of Japan's hike next week. The Federal Reserve's easing door did not open, but the oil reversal changed the trajectory. And the durable edge is the power the build must buy. Talen proved it, with revenue, cash flow, and an $18 billion nuclear contract with Amazon. The bid that needs neither the Iran signature nor a soft Fed, where the edge stays, optionality plus the buyer. What we are watching the next 10 days. The Bank of Japan, June 15th and 16th, a hike to 1%, and the yen carry reaction. The Federal Reserve, June 16th and 17th, does the dot plot acknowledge the oil reversal or anchor to 4.2%? The Iran ceasefire an actual signature versus a collapse. SpaceX's aftermarket, does the 19% debut hold? Oil against the war premium. Talen and new power agreements. A copper review at month-end. And whether Bitcoin confirms a bottom or retests its lows into the central bank week. And we keep score in public. Talen Energy, the lead power layer name, the power the build must buy. EQT, the same theme, lower leverage, the fuel the build buys. Freeport-McMoRan, the copper bottleneck bellwether. SpaceX, the window is open but don't chase a momentum name. Oracle, avoid the capital-raising build-out. Gold, structural but the tactical bid just deflated. Bitcoin, a liquidity rebound, bottom unconfirmed. And Constellation, a nuclear for data centers peer. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. The relief is real, but the deal is not signed. The president canceled the strikes, and oil fell to its lowest since March. But Iran says no nuclear agreement is final. The issuance window is open, and the real risk moved east. SpaceX closed its record debut up 19%, but the Bank of Japan's hike to 1% next week is the headwind nobody is hedging. And the durable edge is the power the build must buy. Talen Energy, inflecting the artificial intelligence trade's physical layer. The edge is optionality plus the buyer. That's the reopening. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. The Strait reopened. The build did not pause. We'll see you in the next issue.